Welcome to this week's look at the state of the New York City real estate market. This is for the week of July 22nd to the 28th. We're going to be looking at what is happening in the New York City real estate market, everything from the luxury market to the Manhattan market to the Brooklyn market. We are now almost at the end of July. So if you are active in this market, you're definitely going to want to stick around for this report and till the end of the report when I give you my recommendations so that you can have the information that you need to help ensure the most successful outcome, whether you're buying or selling. There were 23 contracts signed last week in the luxury market. That is 3 more than the previous week. Luxury for us in Manhattan starts at $4 million and above. This is interesting, I think, because here we are, almost the end of July. You would think things would be kind of slowing down overall, but what we're finding is that, in fact, they are not. We are seeing the luxury market holding pretty steady, even seeing a slight uptick from the previous week. I'll get into why I think that is happening at the end of this report. But for now, let's talk about the number 1 and the number 2 contract signed in the luxury market for last week. The number 1 contract signed last week was apartment 50 at 111 West 57th Street. It was asking just under $27 million. It was reduced from a little over $29 million. It is a condo building. They started marketing off of floor plans back in 2016. This particular unit is a duplex. It has just shy of 4,500 square feet. It includes 3 bedrooms, 3.5 bathrooms. It also features a 50-foot great room with a 14-foot ceiling. Wow. And even better, spectacular Central Park views. Upstairs is a loggia, which is covered outdoor space. It comprises just under 1,800 square feet, and that also showcases gorgeous Central Park views. 111 West 57th Street, as you might recall, because we've talked about it before in this report, is a 60-unit, 82-story building. It rises 1,428 feet on the former site of Steinway & Sons Piano Store. Amenities include a concierge fitness center, 82-foot pool, lounge, terrace, and a private dining room, plus a covered driveway entrance. There are 34 units that have closed so far, and they average about $4,151 a square foot. The number 2 contract was the 12th floor at 133 East 80th Street. It was asking just shy of $11 million. It was listed back in March. It is an 11-room pre-war penthouse. It is a co-op. It has 5 bedrooms, 5 bathrooms, and 2 wood-burning fireplaces. The living room has a fireplace and a formal dining room, and both of those open onto a 9 by 38-foot terrace. Lovely. The eating kitchen and 2 other bedrooms open onto planting terraces. Also very nice. This penthouse needs to be renovated. This is a 19-unit building with a doorman, and they allow just 50% financing. The total weekly asking price sales volume, $157,470,000. Average asking price, $6,846,522. Median asking price, $5,995,000. Average discount from original ask to last asking price, 6%. Average days on the market, 567. Okay, that's it for the luxury market. Any questions, post them below. Reach out to me at Sotheby's. Always happy to answer any questions that you might have about the real estate market. We're going to take a look now at what's going on in Manhattan, then we're going to move on to Brooklyn. 191 properties came on the market last week. Means that supply is down for the week, almost 34%. Contract signed, 199 for the week, down almost 3%. Off market, down a little over 40%, 198. If we look at the monthly market ticker, we see that the supply for the month, 955, down 36%. Contract signed down a little over 20% for the month, 833. Off-market properties rose over 58%, 968. The latest Market Pulse reading down under 1%. It's up under 1% from last month and down just a smidge from last year. We're basically in this neutral market, let's call it sideways market. If we look at the liquidity pace chart, 833 contracts signed over the last 30 days. That is down almost 17% from last month. It's a wash from last year. We're basically in this neutral liquidity state. One of the things that I want to share with you today is Manhattan price cuts as a percentage of the supply. So despite this slower year that we've had, only 11% of the active inventory saw a price cut in July. And while this is in line with seasonal trends, it does suggest that there may be some strength behind the scenes. Plus, with rate cuts on the way, maybe we could escape or avoid the volume trap, meaning, the volume is down, but it doesn't really seem to be affecting the prices. So let's see how that affects. Any questions about the Manhattan market, please post those. I'm going to move on, take a look at Brooklyn now, see how that might be the same or different than what's going on in Manhattan. P.S. It's different. And then I'm going to wrap it up, give you my recommendations. So again, if you are active in this market, be sure you stick around. Definitely going to want to have some of this information. I think it will help you as you are navigating these waters. You want to be sure you are as informed as possible so you have the most successful outcome. Supply in Brooklyn down a little over 7% for the week. 164 properties came on the market. Contract signed 119, down almost 8% for the week. Off-market properties for the week, 77, down almost 24%. If we look at the 1 month supply, 697, that is down almost 28%. Contracts signed, 533, down almost 15%. Off-market properties rose almost 23%, 338. The Market Pulse reading in Brooklyn is different. You can see the latest reading has risen 3.5%. It is up 2.2 from last month and down 1.2 from last year. You see that we are not so much in a neutral market as we are in Manhattan. We are definitely in a market that is rising into what could be called a seller's market, definitely favoring the sellers. This is largely a function of supply and demand. If we go to this liquidity pace chart for this 30-day moving window of contract signed, 533, we see that's actually dropped a bit, down 12.3% from last month, down 10.6 from last year. If we go to the Brooklyn price cuts as a percentage of supply, we see that the percentage of supply seen price cuts is falling in line with seasonality, but given the slower year, we've seen it suggest that sellers still retain some leverage in the borough of Brooklyn. I think that's it for Brooklyn. I'm going to get into why I think Brooklyn, a little more into why I think Brooklyn and Manhattan are a little different, and why, of course, the luxury market seems to be just doing its own thing as it has been. That's it. If you have any questions about Brooklyn, post them below, reach out to me at Sotheby's. We're going to move on now to the wrap up. Luxury market, 23 contracts signed in the luxury market, 3 more than the previous week. 2 of those were at 10 million and above. 16 condos, 3 co-ops, 1 condop, 3 townhouses, 13 were uptown, 10 were downtown, so pretty even split. As I've mentioned, the luxury market seems to be kind of a market unto itself. It is a largely cash market. And the luxury market seems overall to be kind of different than what is going on generally than the Manhattan and the Brooklyn markets. Certainly, below the luxury mark in both of those markets. So we're going to continue to keep an eye on this. I think there's every reason to believe that this could continue right into the fall. Given where we are in the summer, I suppose August could slow down, but we'll have to see. The Brooklyn and the Manhattan markets, essentially, yes, they are both somewhat neutral. Manhattan, kind of neutral, going sideways. Brooklyn, somewhat neutral, but more advantage to the sellers. Again, this is often just a function of supply and demand and the balance in the market. If we look at the supply in Manhattan, we see that about a total of 6,590 properties in total in Manhattan. We saw a drop for the week, down almost 34% in the supply in Manhattan. In Brooklyn, we saw a slightly less dramatic drop, a little over 7%, total of about 3,230 properties in Brooklyn. So the supply in Brooklyn seems to be holding up a little better than in Manhattan, but still the market by and large seems to be holding stronger in Brooklyn than in Manhattan. So let's take a look at the contracts signed for the week. And again, a week does not a trend make, but we are just doing weekly reports here. So we're going to look at contracts signed for the week, down about 3% in Manhattan, down about 8% in Brooklyn. The off-market properties, both in Manhattan and Brooklyn, down for the week and up for the month. As I shared with you, the Manhattan price cuts as a percentage of supply, about 11% in Manhattan and about 14% in Brooklyn. So why is Brooklyn favoring the sellers? Why is Brooklyn seem to be holding stronger? Well, again, ultimately, this is a question of the broader view of supply and demand. What does this mean if you are a seller in any of these categories? If you are a seller, do be careful when you are pricing your property. If you get it right, you will know quite quickly within a couple of weeks. You will have traffic, you will have offers. Hopefully you will have offers you can live with. If you get it wrong, relatively speaking, if you misstep coming out of the gate, you will know that because you won't have a lot of traffic and you probably won't get offers, or if you do get offers, they won't be close to what you were hoping for, close to your asking price. Buyers, if you are looking in any of these categories, especially if you are looking in the Manhattan or Brooklyn markets, let's say not in the luxury categories, you'll probably see more leverage in the Manhattan market overall than in Brooklyn. But in both markets, we're not seeing huge price adjustments overall. So you're likely to see some negotiability, perhaps not a whole lot unless the property's been on the market for a very long time and the seller is quite motivated. Okay, that is it for this week's look at the state of the New York City real estate market. As always, if you have any questions at all, please reach out to me at Sotheby's, or you can post your questions below. As I have said, I am never too busy for your real estate questions, puzzles, problems. Doesn't matter how big or small they are. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.